Seems like you can't go anywhere these days without hearing about cryptocurrency. Your friends are talking about it. You see it all over the news. Some random person on the internet just posted about how they made a fortune from a coin you've never even heard of. It's completely understandable why so many people are curious. The stories of massive gains are incredibly tempting, and the idea of getting in on the ground floor of a new financial technology is exciting. Everyone wants a piece of the action, hoping that a small investment today could turn into a life-changing amount of money tomorrow. It's the modern-day gold rush, and the fear of missing out, or FOMO, is very, very real. This isn't just about getting rich quick, though. For a lot of people, crypto represents something more. It's a new way of thinking about money, one that isn't controlled by big banks or governments. The technology behind it, called the blockchain, promises a more transparent and decentralized financial system. This appeals to people who are tired of the traditional banking world, with its high fees, slow transfers, and endless red tape. The idea that you can be your own bank, with full control over your own assets, is a powerful one. It's this combination of incredible profit potential and revolutionary technology that has captured the world's attention. The truth is, the world of finance is changing. The internet changed how we get information, how we shop, and how we connect with each other. Now, many believe that cryptocurrency is doing the same thing for money. Whether you're a seasoned investor or a complete beginner, it's worth paying attention. Understanding the basics is the first step toward making an informed decision for yourself. So let's break it down. Alright, let's get straight to the point. What is cryptocurrency? Cryptocurrency is digital money. Cryptocurrency is virtual money. Think of it like the cash you have in your pocket, but instead of being a physical bill or coin, it only exists on a computer network. The crypto part comes from the word cryptography, which is a super secure way of encoding information so that only the right people can access it. This makes crypto transactions incredibly secure. Unlike the money in your bank account, which is controlled by a central bank, cryptocurrencies like Bitcoin are decentralized. Visual, centralized versus decentralized. The magic behind all of this is a technology called the blockchain. Imagine a giant public notebook that everyone can see but no one can change. Every time someone sends or receives crypto, a new entry, or block, is created in this notebook. This block is then linked to the one before it, creating a chain. Because this notebook is shared across thousands of computers worldwide, it's almost impossible for anyone to cheat the system or alter a transaction after it has been recorded. This is what makes crypto so transparent and secure. It's a permanent, unchangeable record of every single transaction. With crypto, you can send money directly to anyone, anywhere without a bank approving it. So, you've decided you want to dip your toes into the crypto waters. How do you actually buy some? The most common and beginner-friendly way is through a centralized cryptocurrency exchange. Think of these exchanges like a stock brokerage, but for digital assets. They make it incredibly easy for you to buy, sell, and trade using your regular currency, like US dollars. They handle all the complicated stuff for you and provide a user-friendly interface that feels like a banking app. Perfect when you are just starting out. To get started, choose an exchange and create an account. Coinbase, Kraken, Gemini. These platforms are known for strong security and ease of use. The sign-up process is straightforward. You'll need to provide your name, your address, and your email. You'll also verify your identity by uploading a government ID. This KYC process helps prevent fraud. Once verified, connect a funding source. Link your bank for ACH transfers or use a debit card if you want an instant purchase. Fees may be higher. For your first purchase, start with a small amount you're comfortable losing. Enter the amount, review fees, hit confirm. Congratulations, you now own cryptocurrency. The assets will appear in your exchange wallet. Owning crypto is one thing, but keeping it safe is a whole different ballgame. This is probably the most important part for any beginner to understand. When you buy crypto on an exchange like Coinbase, it's stored in a custodial wallet. The exchange holds the private keys. While convenient, it's a bit like leaving your money with a bank. If the exchange gets hacked or goes out of business, you could potentially lose your funds. It's the classic crypto saying, not your keys, not your coins. For better security, consider moving your crypto to a personal wallet where you control the private keys. There are two main types: software wallet, a hot wallet app on your phone or computer; Exodus, Trust Wallet. They offer a good balance between security and convenience. Write down your seed phrase or recovery phrase, the only way to recover your crypto if you lose your device. Store it somewhere safe offline. If you lose your device and don't have your phrase, you may lose access forever. The absolute gold standard is a hardware wallet, a cold wallet like Ledger or Trezor. They store your private keys completely offline, keeping hackers out. To make a transaction, plug the device into your computer and physically approve it. Then unplug it and keep it in a safe place. For long-term investors, a hardware wallet is a must-have. Also enables strong passwords, a password manager, and 2FA on your exchange account. Never share your seed phrase. This is the million-dollar question, isn't it? Is crypto safe, and is it a good investment? The honest answer is, it's complicated. Cryptocurrency is an extremely volatile and speculative asset class. Its price can go up and down dramatically in a very short amount of time. It's not uncommon to see prices swing by 10% or more in a single day. This is very different from more traditional investments like stocks and bonds. With something like an S&P 500 index fund, you invest across 500 large companies. Risk is spread out. Major losses are less likely over the long term. Crypto, on the other hand, is much more concentrated. It's still a very new technology. There's a chance it could change the world and deliver incredible returns. But there's also a chance projects fail or get replaced. The potential for reward is massive, but so is the potential for risk. So, how can a beginner approach this smartly? Treat crypto as a small, speculative part of a diversified portfolio. Don't go all in. A common rule of thumb: allocate a small percentage, say 1 to 5%, to cryptocurrencies. If crypto soars, you'll get a boost. If they crash, your hit is limited. This helps protect long-term goals like retirement. This is the key to investing without losing sleep at night. Ultimately, it's a personal decision. Educate yourself continuously and prioritize security above all else. Don't chase hype. Use dollar-cost averaging. Invest a small fixed amount on a regular schedule. Take a measured, long-term approach. Good luck. Please like and subscribe. It will help reach more people.